Hi and welcome to Property Buyers April Market Update. I'm Rich Harvey, Managing Director of Property Buyer. Today we're going to be looking at the new guidelines that APRA have brought out for the banking sector. Back in 2014, APRA introduced a credit growth limit on the banks of 10% growth per month. And just last week, they've introduced some more changes to really crimp investor lending and stop speculation. So what are the changes that APRA's introduced last week? The first thing they've done is reduce investor-only loans to 30% growth. At the moment, around 40% of all new lending goes to investor-only loans. They're reducing that to 30%. The other thing they're doing is scrutinising a lot harder the investors that are going for 80% loan-to-value ratios, and those that want 90% or higher, they're really cranking down on those as well. So they're the changes. So what does that mean for the average home buyer and investor? Well, I actually think these changes are a positive thing for the property market. If lending is left unchecked, then we could end up with a situation like in the US of unregulated lending. But Australia has some of the best quality loan books in the world. Ever since the GFC, our banking sector has just been getting stronger and stronger. So these lending guidelines are actually putting better conditions on the banking sector, which means to better quality loans. So what they're trying to do is get a more orderly correction to the property market. Lending left unchecked can result in a lot of speculation and a lot of investors getting burnt. But I think these things will help to cool the market. It'll taper off lending a bit, but it won't have a massive impact like some other headlines will lead you to believe. Another reason that APRA have introduced these new guidelines is to cool the housing market in both Sydney and Melbourne. Over the last 5 years, the Sydney housing market has risen around 77%, and in Melbourne, the figure is 57%. So these dramatic rises have given rise to a lot more people borrowing again with the equity in their home to buy more investment property. So let's have a look now at what the impact of these new APRA guidelines will have on borrowers for home buyers and investors. Look, these changes should hopefully bring more stability and certainty to the lending market. If lending's left unchecked, as we said, it can run rampant. But we're going to have better quality loan books and better quality investors in the market. So reducing speculation for investors is a very positive thing. It helps to build more confidence in the property market going forward, and it means there's less likely to be a crash in the property market. The other thing is the banks are regulated by APRA, but the non-banks aren't regulated. So there's going to be plenty of non-banking lenders out there that are willing to give interest-only loans. But those lenders still operate within very strict guidelines. They don't lend to anyone. You've got to have the right serviceability ratios and deposits to be able to afford a loan with the non-bank lenders as well. But overall, I think it's going to be a very positive thing. So how can you take advantage of these new guidelines? Well, in effect, it's actually going to be a little bit harder to get loans. So one of the things I strongly recommend you do is consider getting in touch with a really savvy mortgage broker. A good broker is going to understand what the new guidelines are, all the serviceability ratios, and work out which lenders can actually provide you with the maximum borrowing capacity. But the good news is interest rates are likely to stay low and stay low for quite some time. Sure, there'll be some couple of rises in the next year or two, but they're going to be fairly moderate rises. We're not expecting a dramatic change in interest rates in the near future. The other thing to think about is to continue buying properties when you can afford to buy. I get asked every week, Rich, when is a good time to buy a property? Look, the best time to buy a property was 10 years ago, but look, that opportunity is now past. So the second best opportunity is when you can afford to buy. So make sure your tax returns are up to date, make sure your financials are in order, and try to get some borrowing capacity again to enter the market. But don't again just pick any property. Don't follow the herd. Make sure you buy investment grade property. The thing about investment grade property is it rarely goes down in value, even during a crisis. Investment grade property is in high demand, and it's not something you're going to pick up for a bargain. You'll need to pay fair market value, and from there you're just going to see positive rises. Look, for home buyers, the impact can also be positive. There may be a few less investors at auction, so it means there's perhaps some less competition for you. So that can have a positive effect. And I also think there'll be some more positive competition amongst the banking sector to get those home buyer clients back on their books. So look, if we can give you a hand in buying your next property, or you'd like a warm introduction to one of our recommended mortgage brokers, we'd love to help you. But the message from these APRA guidelines is don't panic, find your finances through a good savvy mortgage broker, and we'd be delighted to help you. Thanks for listening, and we look forward to seeing you again next month. Bye for now.